Okay, so Bitcoin hit our 200-day moving average. It hit a whole other bunch of confluence of other fib levels. It hit the point where this leg was 61.8 of the first leg, the rally that we made in February. This length, the rally that we've made from March, is now 61.8. So that was a confluence level. It hit the big 200-day moving average, so that was a confluence level, and it hit from the other side the big 50%, if we go zooming out to the weekly, of the rally from the 2015 low. So from the 2015 low to the high that we made just before December, in December we retested the 50% that was support and resistance before. So it's normal to see a bounce off it first time back to this level. Like, it's really normal to glance off it. We've done it before. It's how far back we come when we bounce off it that tells us whether we've made a reversal or not. So are we going to go back below the daily 20 moving average, or are we going to go back below the 236 fib retrace? The 236 fib retrace comes in at, let's put it on the right so we can see it, 91.48 in Bitfinex prices. So as long as we don't go below that, we are still in Fibonacci terms in an uptrend, and this is just a correction. And as long as we don't close below that 20 moving average, which is a little bit lower at 9,090, we are still in an uptrend in terms of our moving averages. Are we starting to flatten out a bit? Yeah, we are. So we are in line for a correction. But we can also draw this as a channel. I've done this on the 4-hour. You know, we are dropping out of the bottom of this, but you know, this is the third touch. Potentially, we could rally from here. So somewhere, I think, between here and 9,000, if we stay in this range until tomorrow, we stay in an uptrend, and we could still see another attempt at those highs. You know, and then, you know, it's quite normal, remember, to see a double top or a retest. So everybody who didn't get out and who's thinking, oh, I really wish I wasn't long of Bitcoin right now, this is right where we potentially could retest those highs and you get your exit. If not, it's probably going to come tomorrow. Tomorrow is when the SEC discussion on ICOs. Everybody I've spoken to in America or in hedge funds or in the know thinks it's going to be a non-event, but nobody's going to step up and risk too much until it's over. Nobody thinks that they're going to declare ICOs securities tomorrow. They might keep investigating, but they're not going to do anything tomorrow. So for now, though, that means that the risk to ICOs is usually more of a risk to Ethereum. And sure enough, Ethereum is coming way back. And so Ethereum against Euro, that 236 level is 597. And Ethereum against US dollar. Which one should we have today? We'll have Finex. We'll take this up. If we tidy this up. So the bull bear line in terms of Fibonacci retrace levels in Ethereum is here at 724. So we've got a retest of that 50% fib pivot a little bit lower at 715, but between 715 and 720, I think, in ETH US dollar. What's most interesting to me is what's going on in ETH Bitcoin. Remember, because ETH Bitcoin is kind of like our altcoin indicator. So ETH Bitcoin, let's hide this for a second. You know, we've seen a reversal at the 618. This doesn't work on all platforms, but if I look at Coinbase or Poloniex, you can see that it does line up with this 382 exactly. So if we draw fibs from the December low to the high that we made in February, we reversed at the 618. Our target's always the 382. That's what we tagged exactly. And now we're reversing. So you know where our target is in ETH Bitcoin. It's going to be back to the 50% pivot in the middle. If I move this to the right, you can see where that is. So 0.07298 is where I think ETH against Bitcoin comes back again, and that's where we can look to buy it again. So that's got a bit further to go. So let's see. This is normally quite a risk-off indicator for altcoins. So this says to me that going forward, it's a good time to de-risk on bounces in some of these altcoins. You know, but a lot of them, and I'm going to go through some now, a lot of them look really good and are holding up really well. And I've probably got 4 or 5 that look like they're set up to buy today. So we'll take a look at them next.